What's up, everybody, and welcome into today's video where I'm going to be breaking down different types of real estate strategies. We're going to be talking about the good, we're going to be talking about the bad, and we're going to be talking about the ugly. Really excited to bring you this information. If you're brand new, make sure you subscribe to the channel. We are full-time real estate investors, and we are on a mission to help you on your real estate investing journey. Welcome to the cream. And we got experience with pretty much everything that you're going to see on the board today and everything we're talking about, probably with the exception of land. We'll get into that in just a second, but thank you very much for being here. So first and foremost, let's talk about wholesaling real estate. I love wholesaling real estate for several reasons. Number one, we got low risk. We got our green marker out here today. So that's a go. Green means go. So I'm very bullish on wholesaling. Even if you do other strategies, even if you're making money in any other strategy, you want to familiarize yourself with wholesaling, because when you're doing lead generation, when you're attracting opportunities into your life, you need to know how to, if you're not going to buy it for yourself, you need to know how to monetize everything that crosses your plate. There's no better way than wholesaling real estate. So this is where we are putting a property into contract, we're controlling a property, and then we are going to find a buyer for more than we're in contract for. What I love about this strategy is you get to very low risk because there's no debt and there's no construction. What you're gonna find in real estate is the riskiest things you can get involved with, which we're gonna get into here with fix and flips and some other strategies, is you have to take on debt to do that. The risk comes into play. Anytime you're taking on debt or anytime you're managing construction, there's a lot of risk involved. You don't have to deal with either one of these with the wholesale strategy. You are simply controlling a property and then finding a buyer for more than you're in contract for. And this allows you to practice the fundamentals of real estate, which you're gonna use in any strategy that you take on. You're gonna need to know the fundamentals. And this is finding good deals. No one ever made money. No one ever got rich by paying too much for anything. You got to know how to find good deals. A wholesaling business allows you to do that. Number two is analyzing deals. You got to know how to do these fundamentals regardless of what type of real estate that you're doing. Wholesaling allows you to learn how to find deals, learn how to analyze deals. And finally, number three, you're going to learn how to talk to sellers, how to put properties into contract. We're putting properties into contract every single day. We have a robust wholesale business. It's actually, believe it or not the favorite type of strategy. I'm going to get into our favorite strategy where you're going to make the most amount of money long-term, build wealth. I'll give you a hint. It is buy and hold. We are very bullish on buying and holding affordable housing. However, I suggest getting a wholesale business or an operation going, or at least an outlet where you can monetize leads that are monetize opportunities that are not a good fit for your buy and hold portfolio. So I love wholesaling, learn the fundamentals, low risk, make profit. Now let's get into land investing. And I shared with you already in this video that we pretty much have experience. I pretty much have experience with every single strategy on this board right now, except for land. We've never got into land because we're very much into buy and hold. And we're gonna be talking about the BRRRR strategy here in a minute. You can't really do that with land for the simple reason there's no cash flow. Maybe you can find somebody to put a billboard on your piece of land. It's very boutique. It's like this, it's just not easy, right? It's not producing cash flow. You're still gonna have property taxes. Even if you own a piece of land, you gotta pay property taxes. It's very difficult to finance. There's just not money readily available to transact in land transactions. Now I will say this. So land overall, I'm giving a red mark, and simply because no cash flow, not easy to finance. I will say this though, wholesale is okay. I know people who flip land and who have a wholesale operation, but they do it with land and they make a killing. This is why I put wholesale as number one. Once you understand wholesaling, you can wholesale anything. You can flip multifamily properties, you can flip land, you can flip houses, you can do a lot with the wholesale strategy. So I am bullish on the wholesale strategy for land, simply because there's no risk and it's very profitable. However, I would not suggest trying to buy and hold land and there's just not cash flow and you just don't have access to the same leverage. Next up, we got short-term rentals. And I got to tell you, we got a lot of experience here with short-term rentals. In fact, right here in this office, we got all sorts of home decor. We got all sorts of stuff that we've furnished short-term rentals with, and then we had to move the stuff out. I'm looking at, different furnishings all over this office because we've we're very experienced with the short-term rental strategy. And I have to say that this particular strategy was probably the most profitable a couple years ago. We're talking maybe 2016, 17, 18, 19, through those years, 2020. It seems like it's pretty saturated right now because it is a decent business model if you can get it going and treat it like a business, and you have the right property, the right location, and create the right experience for the people who are going to be living in or staying in this particular property. It can be very profitable, so we're going to give it a green for the high profit. But another thing you're going to deal with short-term rentals is you're going to deal with high turnover. This could increase some costs. Hopefully you're making enough profit to offset the costs, but there's a lot of supply. Supply has really increased because so many people jumped into this business. That makes me a little bit nervous about this strategy. The financing could be a little bit tough. Most times what people do is just finance it like a normal rental property and then turn it into an Airbnb. However, if that lender was to ask for you to provide a lease and something like that and you don't have a lease, potentially you could run into some kind of challenges here when it comes to the financing. And then you got to think about city ordinances and things like that. You know how it is, the neighbors sometimes get upset when their neighborhood house turns into a short-term rental. We've dealt with this quite a bit, getting neighborhood complaints. We've had to actually hire attorneys to defend us in the short-term rental business. So overall, I'm gonna go ahead and give short-term rentals a red mark. It can be very profitable. Really, the key to success with short-term rentals is going to be the right property and creating in the right location where people want to be, and really creating the right experience. It's got to be furnished and create an experience for that visitor, so they're going to give you the 5-star reviews and you're never going to be vacant. Private lending. Now, I'm very bullish. There's red and green going on here. I love private lending. You get a big green mark here when it comes to private lending. We're very seasoned with private lending, and I'm discussing private lending from the standpoint of you being a private lender. So if you're brand new, which I know a lot of our audience is pretty new, if you're a newbie, I'm giving it a red. I'm saying no, you're not experienced yet, okay? I'm also gonna say no to syndications. And what a syndication is, this is where there's an operator and they're buying a multifamily business, or buying a multifamily property, and then they're going to go out and get 50,000 chunks from all sorts of people. They create a syndication crowdfunding where they're getting all these deposits from lenders like you. If you're a newbie, stay far away. I'm going to advise that you, and well, this is not financial advice. I'm going to say from my personal experience, if you're brand new, I would avoid private lending, especially when it comes to syndications. The reason a syndication lending opportunity is riskier than maybe a one-off lending type of deal where you're lending on one asset with one borrower, so there's one piece of collateral. When you're putting your money into a syndication, it's mixed in with a bunch of different people, and if that deal goes sideways, you're fighting with everybody else. Who gets their money out first? It could be very cumbersome, and really at the end of the day, I've seen these deals go sideways quite a bit. The only people who win at the end of the day are the attorneys who are litigating the entire thing. I've seen people lose a lot of money by being a lender in a syndication. If you're brand new, I'm going to say stay clear of private lending. However, learn about private lending as a borrower. This is how we've been able to amass a huge portfolio working with private lenders on the borrowing side. On the lending side, I'm going to say maybe stay away unless you have a lot of money. And if you do, I'm going to suggest that you look into a self-directed Roth IRA. Lending out of an IRA is the way to really grow an IRA. In fact, many of our private lenders use their IRAs to provide loans, and then we use houses as collateral. Constantly, we're working with IRAs. We're lending out of our own IRA as well. We're a little bit more seasoned. And there's going to be more videos regarding self-directed IRAs. You want to learn that. You want to basically get one for yourself. You could let me know in the comments if you would like a referral to different custodians that we have worked with where you can set up a self-directed IRA. For lending, self-directed IRA is the way to go. If you're brand new, I would say go out and get a property, right? If you're brand new to real estate, don't be a lender on somebody else's deal. Get out there and find your own deals. Next, we got fix and flip. So fix and flip, we're going half green and we're going half red on this particular strategy. And I'll tell you why I like it is because it's very profitable.
Wow.
As you can see, profits, yes, you can make a lot of money in the fix and flip business, hands down, especially if you're in a hot real estate market. We're still in a really strong, it's 2025 right now. We're coming out of an insanely hot real estate market, but we still have a number of fix and flips going on. They are very profitable, they're great. However, there is more risk involved simply because you're taking on debt. So this is the contrary to what we talked about with wholesaling, where it's very low risk because you don't have to take on any debt and you don't have to manage a construction project. With fix and flip, you're taking on both. You're getting a loan, you're paying a high interest rate. Typically, it's going to be a hard money lender or a private lender. We even to this day pay our lenders double-digit interest. It's free money or anything like that. So you're taking on debt, it's high interest, and you're managing a construction project. And I'll let you know, we treat our contractors like family. We treat our contractors like a team because they are. Right? The last thing you need is like a fighting match with a contractor. They can put liens on your property. It's going to end up in court. It could delay the sale of your property. Now you can't pay back your lender. So I'm going to say be very careful when it comes to taking on debt, working with contractors, and doing the fix and flip business. However, if you know your market, here we go. You got to know your market. You know your numbers, right? You're getting a great deal. You're going to find a way to make money on this property. And if you're buying something 50 cents on the dollar, you're going to find a way to make money on this transaction. You're going to find a way to make money. Make sure you know your numbers. Make sure you know your market. It is very profitable. There is a little bit more risk, but we're not opposed to it. We're pretty seasoned in doing this. Maybe once you kind of get started, once you've maybe done a few wholesale deals, your numbers from the fundamentals and whatnot, and maybe then you can kind of get into the fix and flips. And then finally, everybody, the biggest green check mark of the day is the BRRRR strategy. If you're not familiar with what BRRRR is, that is where we are buying, renovating, renting, refinancing, and repeat. This is the #1 way to build wealth in real estate. This is exactly what we have done. We've created lead generation systems. So we bring in motivated sellers, we buy these properties with private money, and then we fix the property with private money. Then we're going to refinance it with a bank who's going to give us a nice 30-year loan, and we're going to rent it out for cash flow. That is the formula to do this. When you're buying a BRRRR property, you want to be all into this deal, meaning purchase and rehab, for 75% of the ARV, that stands for after repair value, 75% of the ARV or less. Stick to that formula. If you're more conservative, you might think 70% of the ARV or less. Buy this thing with private money. Teach you in our program, we're coaches. If you're raising private money, you want to raise all the money that you need, 100% financing for the purchase, the rehab, and if you're getting a good enough deal, you can actually pay yourself up front. We've developed a method to do that. What we want to do is just make sure you're getting a great deal. That is the name of the game. Be all in for 75 or 70%, all in. Buy this thing with private money, fix it up, get it rented out, and then I'm actually going to circle right here, especially if you're just getting started. Single family is going to be a better route than multifamily, especially if you're just getting started, for the simple reason, everybody, that single family has way more inventory to choose from. You can stay within that affordable housing sector. There's more exit strategies to choose from. If you run into some trouble at some point and you got to sell a house, it's much easier to sell a house and get out of a deal than it would be a multifamily apartment building. Now, multifamily's got its pros as well. You can scale much faster. I mean, you can buy 200 units and that just increased your portfolio massively. If you're just getting started, I would look to stick to single family, affordable housing. That is the most bullish I am. That is the best business model, in my opinion, for long-term wealth. And then you probably want to consider doing a mixture of 2 or 3. Maybe you get a little wholesale business going, you get some lead generation going, and then you can keep the best and wholesale and flip the rest. This way you're only managing construction projects on your own deals, on your own rental properties. And eventually, once you are doing these big refinances and you're cashing out and you got a couple $100,000 in the bank, maybe you'll end up being a private lender. You can mix and match a little bit, combine these. I'm the most bullish though on wholesale, BRRRR strategy, and private lending. Hopefully you got value from this video. Make sure you let me know in the comments any questions that you have. We do reply to every single comment, and I look forward to seeing you on the next video.